In this lesson, we're going to be going over candlesticks, what they are, how we read them, the importance, as well as we're going to dig into candle swing formations. So initially, what are candlesticks? We are going to be primarily focusing on traditional Japanese candlesticks to do our technical analysis. Now, if you spend any time on a price chart and seen a candlestick of any sort, or really just a price chart, you will have seen a Japanese candlestick, or what most people refer to them as candlestick charts. The best way to describe candlesticks is that they are a type of tool for analyzing data that's going to help us see price action in a way that's easier to understand and visualize. A candle on a price chart is a graphical depiction of data given a certain and specific time. There are various time frames that we can use on any sort of price chart, whether that's the weekly, the daily, the 4-hour, the 15-minute, the 5-minute, the 1-minute, and anything in between. Basically, what this means when we're looking at a candlestick chart on a specific time frame, say the 15-minute, is that each candle is going to represent 15 minutes of price data. Now, these candles are going to have two key parts that we need to take note of: the body of the candle and the wick of the candle. The body of the candle is going to represent the open and close of that particular candle. And basically what it's going to do is it's going to visually depict the volume that was traded in that candle. Simply put, the bigger the body, the bigger the amount of volume that was traded during that particular candle or that particular time. So if we're looking at the bullish candle as seen right here, we can see that it has a very large body. And what that's representing is that during this candle, as this candle was printing, there was a lot of buying pressure that was happening, and as a result the candle closed higher. And conversely, on the bearish candle, that there was a lot of selling pressure as this candle continued to push down and eventually closed. Now, the way we're able to identify whether it's going to be a bullish candle or a bearish candle is quite simple. A bullish candle's closing price is going to close above the opening price, and on a bearish candle, the closing price will always close below the opening price. Now, the other important component of a candlestick is the wick. Now, the wick is going to showcase the extreme lows and highs of that candle, basically representing the extreme lowest point and the extreme highest point that price traded in that particular candle or time. These wicks are also going to visually depict exhaustion in the markets. As we can see, if we look at something like this bullish candle, for instance, we opened here, we pushed down, there's a lot of buying pressure. So initially there was selling pressure that pushed the candle down, more buying pressure came into the market, so the sellers exhausted, and then that's when price pushed all the way up to this extreme high. That's when selling pressure started to enter the market, pushing the candle down where it ultimately closed here. And then the same thing going for the bearish candle. Price opened here. There was buying pressure that pushed, forming the extreme high. Selling pressure then came into the market and began to push the candle, push, all the way to the extreme low of this candle. And then that's when buying pressure started to come in, or exhaustion of the selling pressure, to push price back up to where price ultimately closed. Now, if a candle has a larger wick than body, this typically represents a battle between supply and demand. So as we can see on this candle and this candle, it doesn't necessarily mean that there's low volume trading within that candle, but more specifically what it's going to represent is that there's a lot of indecision and pressure on both the selling and buying side of the markets. So the candle may close bullish or bearish, but overall there's a lot of pressure that is happening on that particular candle. So while it represents high volume being traded in that candle, it also shows a battle between that supply and demand, because there is no clear-cut delineation between who's in control on that particular candle, whether it's buying or selling. Now, if we look at something that's low volume, this would be small body and relatively small wicks. So if we just compare this bullish candle to this bullish candle, we can gauge pretty quickly that this is a high volume candle in comparison to this candle. And the same thing is true for the bearish candle, where we have a large bodied candle, bearish candle here, and a very small bodied bearish candle here. This is significantly higher volume in comparison to this particular bearish candle. Each candle can be seen as a structural range that fits into a certain time frame. Now we're going to dig into structural ranges and how to use them later in the course, but simply put, the combination of multiple candlesticks is what's going to create market structure and order flow, which is going to allow us to better understand price action. And this combination of market structure and order flow is ultimately what's going to allow us to read a price chart, start to build up trade ideas, and ultimately execute on our strategy. The phantom strategy is a combination of market structure, order flow, and liquidity, and the basis of all of this stems from being able to read and understand candlesticks. Now, the next thing that we want to go over is the candle swing formations. So what is a candle swing formation, and why is it important? The candle swing formation is a market structural level that indicates a pivot and can be seen in key areas and can be considered around key structural levels. These swing formations can give an indication of exhaustion in price and can indicate the beginning of a pullback. The best way to explain a swing high in the market is having the requirement of 3 candles. The first candle should have a high, the second candle will have a higher high, and then the third candle will have a lower high. So essentially the market rounds out. We can see that we create this prominent, almost triangular pattern. So we can see that this high, and this high. So we just have the staging of highs where we have this prominent swing point. And of course, we're able to translate that exactly same principle to the swing low, but instead switch it from highs to lows, and we have a low, a lower low, and then a higher low. So basically, again, we create that V-shaped pattern in the market, which creates a swing point, a prominent structural point in the market. And this is where we can start to combine our candlestick knowledge and really understand the extreme highs, the extreme lows of candles, what the wicks represent, what the bodies represent. What we can see with this is we have relatively high volume. We're starting to see volume taper, or more specifically, we're starting to see a battle between supply and demand with this smaller candle body. And then we start to see price creating a large bearish candle, which shows that this volume in this candle is exceeding these 2 candles. And this is what creates our swing point. So from a market structure standpoint, which we will go into in the next section, we were able to potentially use this as a key point or key market level to understand our overall trend and direction. And from an order flow perspective, this may give us context to potentially use as a supply zone as well. Again, we'll go into all of these concepts in depth in the next sections. And then if we just look at the swing low example as well, we have large volume coming down and then smaller volume, but larger wicks, starting to see some indecision or that battle between supply and demand that creates that swing point, and then price continues to move up. As we can tell in this example, there's a lot less of an example of volume being transferred, where this is pretty clear, where we have fairly large volume, a battle between supply and demand, and then a large volumed bearish candle. Where this one we have a large bearish candle, large volume, moderate volume, and moderate volume. Relatively speaking, this bearish candle still has the most volume in comparison to these 2 candles. But what we can see is that the wicks are starting to get larger as price is pivoting around this, which does show that there is a battle between supply and demand. And the key thing to note is the market swing point. And of course, a swing point alone, and even just being able to read singular, or in this case 3 candlesticks together, is not going to be enough to make an actual full and tangible trading decision. We'll need to start adding so many more elements to our trading and our technical analysis. But this is an overview of candlesticks, why we use them, how we read them, and the importance of them, and then moving into the candle swing formations and the importance behind them. All of these concepts are going to lay the foundation for what we're going to be going over in the next video lessons. And this is truly the foundational concepts of how we are going to be interpreting, reading, and ultimately making decisions based on the data that we are seeing on our price chart.